third installment of the TechUp 0123 series organized by TechUp Pilipinas, the Distributed Ledger Technology Association of the Philippines, the Fintech Philippines Association, UnionBank of the Philippines, UnionBank Global Linker, and UBX. Today's discussion will delve into how regulators can serve as catalysts for innovation and the strides the Philippines and Singapore have been making on this front. We're going to begin the program with opening remarks from UnionBank Vice Chairman Justo A. Ortiz, to be followed by brief remarks from our esteemed speakers to provide the backdrop of their respective initiatives that promote innovation in the Philippines and in Singapore. We are very honored to have with us today none other than Bangko Sentral ng Pilipinas Governor Benjamin Diokno, who prior to his appointment at the helm of the Philippine Central Bank, served as budget secretary across 3 presidential administrations, including the current one. We are also pleased to be joined by the Chief Fintech Officer of the Monetary Authority of Singapore, Mr. Sopnendu Mohanty. Mr. Mohanty's group is responsible for regulatory policies and development strategies to facilitate the use of technology and innovation in the financial sector. He is a global innovation strategist in financial services who has spent over 20 years in different leadership roles in the fields of finance, technology, and innovation. Following the speaker's remarks, we are going to proceed to the fireside chat with Governor Diokno and Mr. Mohanty, to be moderated by Dr. Ortiz. To ensure that we all get to hear what promises to be an insightful conversation, may I remind everyone to keep their microphones on mute. And should anyone from the audience have questions for our speakers, you may type them in the Q&A section below, and we are going to try to answer some of them at the latter part of the program if time permits. With that, I now turn over the floor to UnionBank Vice Chairman, Chairman of the Fintech Philippines Association, and the Philippine Payments Management Incorporated, Justo A. Ortiz, for his opening remarks.
Yeah, thank you, Siel. Regulation and innovation, they sound like oxymorons. And for a long time, that may have been the case, but it is no longer. My first experience actually was after the 2008 financial crisis, when the regulators came out with a raft of regulations and macroprudential policies and were very strict at enforcement. And for the banks, at least I can speak for myself, this was a very frustrating time. And it was frustrating because the amount of data, the variety of data, and the velocity at which data was coming and which needed to be managed so that we could have integrity in our reports and timeliness in our reports in a semi-automated environment required us to just throw a lot of people at the problem. And it became very expensive, it became inefficient, and I'm not so sure how effective it was. Until we realized that this was actually an opportunity, an impetus for our digital transformation journey. Because the only way to handle these compliance requirements in a sustainable, effective, timely way was to digitize all our processes so that we could acquire the data, store the data, access the data, and report the data out in the various cuts that the regulator wished to see. And of course, that fed into our own strategic planning exercise. So it's really, to me, a wonder how this frustration actually became a impetus to digital transformation. But somewhere maybe around the first half of this decade, the regulators began to take positive action. moving us towards the direction of a financial industry that was relevant to the fourth industrial age, that was customer-centric, that gave our customers a awesome experience where possible, and that was highly competitive, safe, and secure. All those dimensions required us to change the way we did business, and there was a whole series of circulars that came both in the Philippines and in Singapore that basically put this forward to the financial industry: innovate or die. And I think that that idea, digitize or perish, was something that the regulators put forward with us, and which we needed to respond to in a very positive way to ensure that we can move forward and serve our customers by creating value in the communities and in the society at large. So I'm really, really excited to have Governor Ben and Chief Mohanty with us today, because they are the star innovator regulators. And I think it's really exciting to have them and be able to talk to them and see what is in their minds, what are they thinking, and how are they going to bring us forward to a prosperous tomorrow where we have inclusive prosperity for all. So I think with that, I'd like to invite Governor Ben to give his opening remarks.
All right, thank you, Justo, and good afternoon, everyone, from the Monetary Authority of Singapore and the Union Bank of the Philippines. First of all, I'd like to thank the organizers for having me here. I would like to thank them also for scheduling it at this time, where most people are extra cautious in their movements. Truly, this type of event provides a much-needed push to boost excitement and to set the wheel of innovations in motion once more. Indeed, technology has played a crucial role in reviving the economies that were put to a test because of the COVID-19. That is why, in the BSP, we recognize the role of technology and innovation in helping our banks and other financial institutions deliver financial services in the digital realm. The BSP has long pursued to set up the appropriate regulatory environment in fostering continuing development in the financial services sector. We encourage activities by formulating regulations that enable financial innovation to prosper. Our approach to regulating fintech is shaped by three principles. First, we ensure that regulation is risk-based, proportionate, and fair. And second, we maintain active multi-stakeholder collaboration. And third, we ensure that innovations work for the benefit of consumers, especially the most vulnerable ones, and those availing of financial services for the first time. The BSP has drawn up a fintech roadmap outlining our priority policy initiatives around three key areas, namely collaborative engagements, commensurate regulations, and capacity building. The fintech roadmap seeks to build a regulatory environment that allows innovation to flourish, but always mindful that risk must be effectively managed and that the financial system remains safe and sound. The roadmap has three elements. The first element supports the principle of proportionality, where regulations are calibrated according to the fintech's risk profile and systemic importance. This means that prudential requirements are anchored on the activities performed by these entities, and appropriate regulations are imposed depending on the risk that may arise from these activities. This approach promotes a level playing field and ensures that beneficial innovations are not hampered by unwarranted and excessive compliance requirements. The second element seeks to improve BSP capabilities by exploring regulatory and supervisory technology solutions that aim at streamlining our manual-intensive processes with the use of predictive analytics and artificial intelligence. This automation enhances the timeliness and quality of our risk-based decision-making and consumer complaint oversight. Meanwhile, dedicated teams responsible for cybersecurity surveillance and promoting digital or fintech innovations are put in place. A separate group is also assembled to perform the payments oversight, licensing, and policy development towards the realization of our goal of establishing a safe, efficient, and reliable national payment system. The last element speaks about collaboration with fellow financial regulators, as well as with fintech players. Such collaboration aims to ensure policy consistency and prevent regulatory arbitrage, so we can optimize the potential of digital innovations in financial services. The BSP also provides a flexible test and learn environment, or the so-called regulatory sandbox, that is designed to actively engage and oversee fintech innovators. Underpinning these strategies is the BSP's test and learn approach. This allows regulated institutions to implement innovative financial services in the market with carefully tailored conditions, while the BSP seeks to fully understand its peculiarity and assess the attendant risk. Such an approach helps us decide on the appropriate policies that can be applied to mitigate any potential risk in a manner that also allows financial institutions and consumers to reap the benefits from using these technologies. One good example of a successfully implemented test and learn project is that of the UnionBank's I2I, which stands for island to island, institution to institution, or individual to individual. This aims to bring millions of unbanked Filipinos to the financial system by connecting rural banks and other entities using the I2I platform, where real-time transfers and remittance can be performed using blockchain technology. We are optimistic that such a framework will further open up the market for non-bank players and expand the financial ecosystem in the country. The pandemic has brought a sense of urgency to these reforms. In the last decade, there has been one of main drivers for BSP, as we did not seek to use technology, but rather enable financial institutions and consumers to envision the possibilities for an inclusive digital financial ecosystem. We are working as hard as we can to ensure that the Philippines stays to be a conducive environment for innovation. As institutions are increasingly exploring contemporary technological use cases and delivery models, the BSP is crafting supervisory tools to influence incumbents and new fintech players to develop and harness innovations without compromising consumer protection, security, and financial stability. The BSP has issued new regulations and amended existing ones, particularly those governing electronic money, payment system, national quick response code, virtual currency, information security, and anti-money laundering risk management system, to name a few. On matters involving maintaining public trust and confidence, BSP issued appropriate consumer protection regulations. In line with the reform agenda of promoting digital innovations and increasing the ability of safer and more efficient channels for delivering banking, payment, remittance, investment, and other financial services, the BSP streamlined the process of securing the license to engage in electronic payment and financial services, or EPFS. At the same time, we crafted a policy that requires EPFS with fund transfer functionality to be interoperable by participating in automated clearinghouses. As a result, supervised institutions offering fund transfer services are required to make InstaPay and PesoNet available in all their electronic delivery channels. Meanwhile, the passage of Republic Act number 11127, otherwise known as the National Payment Systems Act, provides a single, overarching, and comprehensive legal and regulatory framework that governs all participants in the payment systems. Under this law, all operators of the payment systems are required to register with the BSP, establishing BSP's authority and power to impose administrative sanctions and penalties, as well as designate payment systems to protect the public interest. An equally critical aspect of our responsibility is the continuing recognition that cyber security is one of the leading concerns in the digital world. Thus, to strengthen our fintech and cyber risk supervision, a dedicated team that conducts more expansive surveillance of the cyber threat landscape, develops risk-based and calibrated supervisory responses, and coordinates with the BSP-supervised financial institutions on emerging cyber threats is set up and mobilized. As the BSP strives to create an enabling environment for these new technologies, these regulations will continue to keep in step with the development while not compromising consumer protection standards and in the process ensuring the welfare of the consumers. Accordingly, the BSP has pursued policy initiatives that will encourage sharing of information among financial institutions and non-financial institutions in the course of offering innovative but responsible financial services to customers. Factors to be considered in this endeavor include data governance, security, and interoperability standards. Open banking will allow software applications to communicate with each other and exchange banking and associated financial data through the use of application programming interfaces, or APIs. This creates greater financial transparency options by giving customers access and control over their own data while providing financial institutions with substantial benefits for competition, innovation, and productivity. While the extent of existing API utilization has leaned towards bilateral arrangements, the BSP has exerted active efforts in pursuing the open banking initiative towards an industry-wide regime. The open banking framework aims to reshape the banking industry, challenging the long-established player with increasing competition and the necessary adoption of standard technology. However, open banking is not without risk, given the potential for malicious third-party applications to steal customer information and other data protection violations. This serves as a key barrier to hurdle as we lay the regulatory groundwork to protect the customer's confidentiality and the financial institution's core systems. As we push for the country's digital agenda, the need to enhance the financial consumer literacy of Filipinos remains an essential BSP endeavor moving forward. The Philippines' notable strides in pushing forward the digital agenda cannot be fully realized without the confidence from the consumers to adopt these financial innovations. Financial literacy should be embedded in our daily lives so that we are able to understand the value of our digital financial identities and correspondingly be equipped to secure and protect it. Consumers have to observe proper cyber hygiene and ensure strict confidentiality of personal information. These are some of the most basic but effective means of countering fraudulent tactics, which have grown in sophistication alongside technological developments. To further advance digital literacy in the Philippines, the BSP and industry players must unceasingly expand the conduct and coverage of customer awareness campaigns and employ various delivery channels, such as social media platforms. We believe that it's through the presence of a supportive yet vigilant regulator, as well as a responsible and consumer-oriented financial market that enables our key stakeholders to put their trust in the country's digital agenda. I have spoken about the changing demands on regulation during these times of uncertainty, and I have shared with you how the BSP has tried to address challenges as we strive to regulate the Philippine banking and fintech sectors. I'm sure that many more ideas will surface, not just from the regulators, but equally from the private market actors and the wider society. From these discussions, I sincerely hope that we will all come away with a rejuvenated drive and clear directions on responsibly navigating the regulations and the waves of financial innovation. Thank you.
Thanks so much, Governor Ben. And before I turn over the mic to Chief Mohanty, I'd like to engage you with one or two questions that are related to what you said. You know, one of the diagnostics that BSP did with the Better Than Cash Alliance, one was in 2013 and another in 2018, showed that digital payments actually came up from 1% in 2013 to 10% in 2018. And you have set a goal of 20% by the end of 2020 because it was deemed that 20% digital transactions would be a tipping point. And I think you went further and said that by the end of your term, which I think is 2023, I'm not sure.
Right.
That we should be at between 30 to 50% digital transactions. So that's really exciting because it shows how determined the BSP is and you as the leader to really drive inclusive prosperity. But one of the items that came out of that diagnostic was the issue of banking the unbanked. And foundational to that is the national ID. And,
Yes.
and you know, one of my favorite Nobel Prize winners is Elinor Ostrom. And she said many things, but one of the things that she said is the people on the spot are the ones with the greatest incentive to get the solutions right. And I think in the case of this mission of financial inclusion and inclusive prosperity, the BSP is the major beneficiary of, it's the major stakeholder, and it's a specific mission. Yet the national ID is under the NEDA. And although there has been a law, nothing much has really happened. And this is foundational to these goals that we have together of shaping a financial industry that was inclusive to all. Do you have any comments on that, Governor? Is the BSP involved in shaping the national ID so that it's more than just a card, but actually a digital register of people's data, at least basic data to start with. And the second question I have, just so that you can think about the answer to the first one, is in that same diagnostic, 85% of the transactions were individuals. And there was a noticeable gap in B2B transactions, business to their suppliers, business to their distribution channels. And again, what was pointed out was the gap in e-invoicing and e-receipting, which is again in the purview of the Bureau of Internal Revenue. But again, this is an important gap that needs to be filled if we are to achieve the goals that you have articulated. So I don't know, Governor, if you want to comment on these two items and how the BSP is really a very important, and certainly in case of individuals banking the unbanked, the key stakeholder, what kind of influence do you have in terms of making this happen, a national ID and an e-invoicing, e-receipting environment?
Yeah, indeed. Thanks, Justo, for that question. My interest in this actually started even when I was in the cabinet, not in the PSP, when Congress passed this national ID system, which, by the way, took, I think, 2 decades to pass, right?
Wow.
The main concern was who's gonna do it, because as you know, in this country, when you bid out something for the private sector to do the national ID, bidders will challenge the winning bidders, and it will take forever. It will go all the way to the Supreme Court. So at that time, I said, look, since the law says it's the Philippine Statistical Authority who will be responsible for this, I said, then let the central bank print the ID. No more bidding, and that will solve the problem. And so that was before I joined the BSP, and then it turned out I moved to BSP. Now we're doing the printing. We are responsible for printing the ID. We're ready to print, and so we're just waiting for the data from Philippine Statistical Authority. And I'm pushing forward for this. On the e-invoicing and e-receipts, I remember, I think about 2-3 months ago, I talked with Commissioner Dulay, because this really is very important. Because we have this e-gov pay facility where individuals, corporations can pay taxes, fees, assessments, whatever to the government. And so the critical question is, some would look for the receipts or the invoicing, etc. And we're moving in this direction, and I'm hopeful that maybe we'll come up with a solution soon. All right, on the e-invoicing and e-receipts. And there's also you're talking B2B, the business to business. I think an example of that will be the InstaPay and PesoNet, where you can make interoperable transactions now. And so we're really hopeful that, given the crisis, the pandemic, our target that by the end of my term, which is middle of 2023, our initial target before the pandemic was that 50% of all transactions, financial transactions, in value and in volume, should be in digital form. I think with the pandemic, we're gonna complete that even before the end of my term, maybe by the end of 2022, or if we're lucky, maybe end of next year.
Wow, that sounds exciting.
Yes.
I wish you luck, Governor, because we really need to get this national ID going. It's been quite some, and it has to be in digital form with a register that we can trust, that keeps the data safe and secure. And e-receipting and invoicing, I think, is a more challenging task, but hopefully we can get that done. So thank you. And then let's hear from Chief Mohanty, and then we'll start the chat.
Thank you, Dr. Justo and Governor Diokno. That I was about to say that articulation by Governor Diokno on the whole regulation piece would have been exactly same if I had to present. So we share the same values and same thinking when it comes to regulation in fintech. So at least that spared me from going in depth.
Excuse me, Chief, you're coming in choppy. Who's hosting this? Can you mute all the mics except for Chief Mohanty?
Hello, okay now? Is it okay now?
It's still choppy. Sopnendu, maybe you should disconnect first and then connect again just to make sure.
Yes, I'll do that.
Tito, go ahead. Maybe you can take it away first with Governor while he reconnects.
Yeah, so anyway, that's really exciting, Governor, because the national ID has been really long in the making, and the idea of it being just a card, I think, needs to be challenged. And I remember that it had a very expensive chip because a lot of information needed to be on card, and I don't know if that thinking is still.
Sorry, I'm still on. Hi.
Yeah, okay, now you're clear.
Okay, good. So I was telling that whatever Governor articulated was it would have been exactly the same if I had to speak about the regulatory construct of Singapore. So we both share the same thinking and the same approach to regulation. So I thought the best time, time well spent, is to talk something else. So what I thought is to lay down, I've got one slide, just to lay down what is happening in the COVID-19 scenario and what is going to happen post-COVID-19, and how as a regulator, as a policymaker, we are thinking and responding to this crisis, and from a very fintech perspective. So if you think about, and one striking observation is that there is a shift from focus on efficiency and productivity to resiliency and sustainability. One thing the crisis has shown that we got to be resilient and we got to be sustainable in whatever we do. There are many examples within the financial services which talks to this sustainability issues. Think about it. In many large cities during COVID-19, there was a huge migration of temporary workers, casual workers from the cities to the villages. And they could not stay in the city beyond a month because they had no savings. They had no pension plans. They could not have an extra cash which they could sustain themselves in large, expensive cities. If we had a good, inclusive micro product for them, a micro savings, a micro pension plan, a micro insurance, they could have perhaps survived this crisis as against not having a sustainable, inclusive financial product for a lot of these people in large cities. So resiliency, sustainability, green, climate is a big part of our thinking as we go forward. And to the other side is digitize or die. There is nothing, this debate of when to digitize, how quickly we can digitize is a moot point. It is going to be a high-tech, low-touch economy. That is the method and the format at which every country are going to recover in this whole space. There'll be highly digitized services, SMEs, banks, all sectors will be working very hard to digitize their services and stay connected. And that brings to the point raised by Dr. Justo that, so how do we do that? And I'm going to not in the order I have set it up, I'm going to pick the third one. To do that, you must you must have a national digital infrastructure. It is a critical component for all the services when they get digitized to stay connected. You must have a national ID for everybody in a digital form. You must have a corporate digital ID. So both company and individual have a trusted digital ID. My personal preference is non-physical way, because that allows you to expand, manage the whole process much better. But many countries, because of constraint, they may think about a physical manifestation of a digital ID, but that's my preference. The second part is, as we connect these ecosystems, as we connect these businesses, the data associated with this ID must be trusted. There is a need to build a trusted data exchange at a national level to ensure minimally the IDs and the associated information is trusted. A trusted KYC process, a e-KYC process. If banks are going to onboard corporates to their account opening process, they should not be seeing these people face to face. They should have a corporate ID and a corporate database which they can use to onboard this corporate account to the system. So there are many examples around trusted data as a way to go forward. And the third piece are the most debated and the most discussed is the payment system. I think this is water under the bridge. I think we got to this is the norm. It has to be simplified. It has to be based on an identifier. There are many examples. You can use your mobile phone number and ID to just send money to each other. You can use QR code as Governor articulated. That's the way to go forward. And the last piece, which I thought very important from policymaker point, is that it must be approved by individuals. Citizen-centric consent, which means each of us have the right to choose whom to share the data. And we should be able to enforce that in a systemic way so that it is trusted. Because if you don't empower people with the choice of data they're sharing, I think that the whole platform or the whole ecosystem becomes highly untrustworthy. So having a citizen-centric consent is a key part of the digital ID infrastructure, digital infrastructure. Now that itself doesn't solve the problem, which means tomorrow, if Philippines has the similar infrastructure, there's a picture behind there's a background image, a lot of doors. We should be able to interoperate, which means my ID should be able to talk to the ID in Philippines systems, which means our IDs are trusted by both countries. Our payment systems are connected. Our data system can be used through an API to pull if I'm doing a business in Philippines. So vice versa should also happen in Singapore. So there's a need to connect this infrastructure, provided each country have built this in a way it is interoperable. Now shifting to this a little bit to our financial sector, which is core to us, is the left side, is the open and connected financial services. And this is something we have been working for last 2 years. And I deliberately, I'm not using the word open banking, because open banking can create many different meanings for many different people. Here I mean open and connected financial services, and there is a national infrastructure which allows banks to be able to provide API services which can be then executed through a switch at a national level, and data can move from or can be viewed and moved from A bank to B bank to C bank. And that is how I believe the open banking should look like. For example, if I am a customer of UnionBank, I should be able to pull my balances from other banks in Philippines through an API gateway through this national infrastructure network, and able to see my balances in total through my UnionBank account. Similarly, another bank can also look at the balances in total by pulling their balances and details out of UnionBank. And that whole orchestration is what I call as an API service marketplace. And that's what in Singapore we are building. It is going live end of this year. To me, that's the first fundamental step to open banking, which means You are able to freely interoperate between different banks, and you can break away from the silos of data and insights. Now, there are many examples we can talk during our fireside chat, but that's one example to articulate what I meant by open and connected financial services. There is also a subcategory which I want to quickly talk about, is that a banking system can become very rich, very evolved, very advanced if the core architecture of the banking system is open and microservice driven. And that has been last 4 to 5 years. I've been telling to every time I go to every country and I meet every bank CEOs, I almost plead to them, please open up microservices, have bilateral relationship with fintechs, bring fintechs to your system, digitize faster. That's the best way and the most smartest ways to go forward in digitizing your services. And that leads to the second box, which is the collaborative mindset. This is where Philippines and Singapore is working very closely, the API exchange platform. I strongly think that a platform like API exchange truly democratizes the process of innovation. It allows banks, insurance company, asset management company across different markets to come together and experiment in a safe and sound, in a cost-effective way. And it doesn't matter whether you are a tier 5 bank in a province in Philippines or you are a tier 1 bank in Manila. The access to innovation is exactly same through an API exchange. You can come to the platform, you can build a little database there, you can invite fintech and do your proof of concept, understand the capability and integrate back to your system. That partnership building, that platform thinking, that experimentation can really transform and accelerate the process of digitalization. And the last piece, which Governor spoke very articulately, is around the whole regulation balanced and agile method, the activity-based regulation, risk proportionate. This is exactly how we should be thinking. And one example I want to give here is our own experience in payment regulation. 2016, we took a look at the payment regulation. It was like one big regulation, and it didn't really differentiate between what kind of payment company underlying the policy under the regulation. In 2020, early or late 2019, we got a new regulation where we have broken down the whole payment regulation to 7 modules, and each module is a regulation for a particular activity of payment services. As governor articulated, it is proportionate to the risk that activity is bringing. So the whole regulation become not only comprehensive, it captured the whole space of payment. We could regulate now everybody, but same time the regulation is not overburdened. It is balanced. It is thoughtful. It drives the 3 principles: consumer protection, AML CFT standards, and ensures they're all interoperable. I think once that is all achieved, I think the regulation becomes agile and more balanced. And that is the way to go forward, as technology, as we know, is actually unbundling so many things. So regulation has to unbundle to match to this changing scenario, which is happening very rapidly. So I can take a pause here, and that's my overview intervention in this space, and we can talk in detail along with Governor.
Yeah, thank you so much. It's very exciting, but I'd like to talk to you about the monkeys in the room.
Okay.
Because, and what are they? Let's start with the API marketplace. So when you talk about an API marketplace, the establishment players, the establishment financial institutions who have spent a lot of money building the rails, if you will, of the national payment system, may now articulate that the fintechs or the new players, financial services players in this API marketplace will now have the opportunities to freeload on their rails. So that's one. The second is the data sharing of the customer-centric consent. So customer-centric consent puts to question who owns the data. And most of the establishment players, including ourselves, have spent a lot of time gathering data about our customer, protecting it because we have Secrecy of Deposits Act, and spending a lot of time guarding it because it's valuable information. So now the monkey in the room is, are we going to hand this over to the rightful owner, which is the producer of the information, which is the customer? And I think the third one is which I think you answered, that aside from risk-based regulation, you also talk about activity-based regulation. And that might answer the question of regulation light versus the regulation heavy of the universal banks or the establishment financial players, which in some, for some people, represents a unlevel competitive playing field. So I think those are the three monkeys in the room, right? Data sharing, API sharing, and regulatory arbitrage, if you want to call it that.
No, I can pick one or two, and Governor can respond to the. So, if I may, Governor, can I go? Or, let me get one monkey out of the way. The first monkey I want to get out of the way is data sharing. In Singapore, and I strongly believe, Governor, hopefully you'll agree with me, data sharing is a dual responsibility, which means if I take data, I must give data. I cannot take data, give nothing. So when you participate in a public platform called API Data Marketplace, every participant must be giving something to receive something. You cannot be a fintech saying that I only take and I have nothing to give. So we got to find a mechanism, a principle, a structure, a governance model where there is a clear, fair play, where the producer of data is also a receiver of data from other party, which is receiving data from this party. So that's one thing I want to get out of the way, because without that, banks would have refused to move forward.
Well,
like
let me interrupt, right? Because the establishment player saying we have the data. So okay. Yeah, and I don't have much data to get from the other guy. So
let me ask you that question. Will you like to have data from Grab in Manila? If Grab wants to take financial data from the marketplace, do you like to have Grab data? They have data of something which will make useful to you.
Right.
So yeah. So there are this participation equality, so that we ensure that there's enough contribution. Of course, we have to make some qualified choice. Data has got many definitions, and it brings to the third point: API services. You cannot allow participants whose API services are not stable, not sustainable, not scalable. There has to be some level playing field in the stability of the providers of the information also. So there are this combination of factors which I believe will ensure such monkeys not to be playing around, but there will be a small segment of window, a small window of opportunity for a fintech player, a small player, to be able to tap into such services, provided there's a clear consent of the customer. But that has to be subject to a lot of other issues. Sorry, Governor, you want to come in on the API and data?
No, go ahead. I think you're doing fine.
Okay.
Two monkeys.
Yeah, but maybe I'll ask Governor Ben, because I think this is something close to your heart. Every time we go and request for waiver, for example, of the fees that we charge on InstaPay and PesoNet, there's always this undercurrent of freeloading in the rails, the investments that have been made, which the EMIs, in our case, the EMI licensees, get to use for free, at the expense of the larger players. And I think that becomes a obstacle to I mean, I don't agree with it, but it's clearly an argument or an obstacle that needs to be overcome if we're going to have a open banking environment. I mean, do you have any thoughts on that, Governor?
Yeah, right now we're into conversation with the Bankers Association of the Philippines. Of course, we as regulator, we have to consult with you guys, and so maybe at some point, maybe soon, we'll arrive at some consensus.
Okay, so that's great, because these are the kind of hurdles. So I think I'm trying to be conscious of time. I mean, we talked about activity-based regulation, and maybe that's a way of overcoming this idea of regulatory arbitrage. And clearly, I mean, there's another dimension of risk, because the different stakeholders in a national retail payment system, which I think the governor spoke of and has articulated, that, you know, the different stakeholders or participants represent different sort of risk ratings, if you will. Some are AAA, some are single A, some are BBB, and that obviously creates a bit. But I'd like to change topic, Governor Ben, because I think we have 6 minutes to go, and I need to ask this question. One of the beneficiaries of your regulatory sandbox is UnionBank, and as you mentioned in your opening remarks, we were able to build eye-to-eye network, and the BSP approved that the exchange of value in that network would be a stable coin, which is PHX, a peso-backed digital currency, PHX, which you allowed us to issue. But having from that discussion, so that's being implemented, it's happening. Has there been any discussion at the BSP level or with ASEAN counterparts about a central bank digital currency?
There are some discussions. I think we've been talking to our ASEAN neighbors with Singapore and Thailand and Indonesia. Yes, there are, but it has not progressed so much. But I think that's the next step. I think talking of the open banking mentioned by our friend here from Singapore, I think that's the next step for central banks in the ASEAN region. Initially, maybe with Indonesia and Singapore, Philippines, and Thailand, maybe we can come up with a system that will work for us. Yes.
Yeah. Okay. So that's interesting. And maybe as before we go for the closing, Chief Mohanty, is there anything in your regulatory sandbox that's exciting that you care to share with us?
You know, talking about blockchain, DLT, and cryptos, of all, in almost 50% of the regulatory sandbox candidate has something to do with DLT. And I'll give you two, because now we've been running for last 2 years. I was surprised that it's almost market forces can get it right. If I look at my regulatory sandbox, the last 5 candidates in regulatory sandbox are solving, because people complain, hey, DLT is a solution chasing a problem. I finally believe that's not true. If I look at my last 3 candidate in the sandbox, I'll list for you. There's a company called iStocks. What it is solving private market digitization. Think about it. A private market is highly illiquid, highly non-transparent market. Nobody knows what happens there. Guess what? The best technology as of now is DLT. They're putting a lot of DLT technology to make that whole market end-to-end digitized, transparent, and highly liquid. Second example, in that sandbox, There's a company called Bond Evalue. What it is doing, it is fractionalizing bonds. Bonds are so difficult to know where they are located, who is holding what bond, highly illiquid, lacks transparency in terms of market visibility. They are fractionalizing bonds so retail players can buy bonds small size. Third example, there's a company which is also looking at digitizing the custodial services. Very difficult to digitize. A lot of trust factor involved. DLTs out there. What I'm trying to say that the whole stack in the sandbox is now defining a most difficult problem being articulated within the world of DLT. And hopefully what we get out of it will take us to that end state, which we have been looking for, productionalizing DLT. But let me quickly add to your CBDC question. I think Governor briefly articulated that. I see the CBDC in two stages. The first stage is wholesale CBDC. This is where Philippines, Singapore can collaborate and improve the cross-border payment, because wholesale currency can be used as a settlement currency to simplify the whole cross-border transfer. Today, cross-border is a shame. Banks still struggle to get the cross-border right. It is expensive, it is time-taking, it is highly onerous process. Maybe CBDC, wholesale CBDC can solve the problem. This is where Philippines and Singapore can collaborate and demonstrate a good use of CBDC. On the retail CBDC, let me be very clear. It is a very unique thing because it is looking for a problem statement, but there are places which I personally believe, not MAS view, but my personal view is that the retail CBDC's best practical use case is direct benefit transfer. If government wants to do direct benefit transfer directly from central bank or Ministry of Finance, they can issue retail CBDC, program it to that particular target audience, restrict the use of currency, the CBDC to, you can't buy alcohol, you can't buy cigarettes, but you can buy food, medicine, program that whole thing into a retail CBDC and use this as a direct benefit transfer to poorest of poor. I think there could be a play there where a retail CBDC could be very useful. That's the hope, that's the future. So I want to leave some optimistic view on the retail CBDC.
Okay, that's great.
So
I think Governor wants to say something.
Yeah, I agree that we should move into CBDC among maybe, first of all, ASEAN 5 countries, Singapore, Philippines, Thailand, and Indonesia, and Malaysia. But at the wholesale level, I agree that the retail level is more problematic, but I think we could start with a wholesale level and it could be interoperable among the ASEAN countries. In fact, I just created a task force to study that possibility.
Yeah, and that use case of what we call the 4 Ps here, which is something that we struggled with during the pandemic, doing the social amelioration payments. Right. I think it's interesting in that the CBDC can be programmed to be used only for essential goods and services and not for, as you said, drinks or cigarettes or whatever, yes. Right?
Yes.
I think that's a very interesting idea. Well, I'm conscious of time.
Just 1 second, because okay. Governor is here. I want to pitch to him. There's one thing we also can solve as both countries is the trade finance, is the small medium enterprise connecting to each other. We have an initiative with the bank, Union Banks, the Business Sans Border. I think this is another example where we can bring small medium enterprise from Philippines and Singapore to start connecting digitally. I think that's another infrastructure we must think about from a long-term digitization process. Sorry.
Very good. We'll look into that. Yes.
Yeah, so it seems like we can go on for hours, but I think it's come to an end. I think we can do a phase 2 somewhere down the line. But, Governor Ben, thanks so much for your time. Thanks so much for your openness. And thanks so much for your progressive outlook. And most importantly, thanks for pushing all of us to be more innovative, even though sometimes we go kicking and screaming. But clearly, it's the right way to go. And we're looking forward to working together with the BSP to make this possible, this goal of inclusive prosperity for Filipinos. And Chief Mohanty, you know, we have a lot of projects together. We've done APICS. We've done the, as you said, Business Sans Border. We're involved in your project Veritas, which is ethical AI. We've done a cross-border payment through using the I2I network from Singapore to Cantilan, Surigao del Sur. So, you know, there's a lot of things that we look forward to continue working with you. And hopefully, are we going to have a Singapore Fintech Festival this year?
Yeah, much bigger, much bigger.
So hopefully all this, I hope it's not a virtual one, because I think the face-to-face one is a lot more.
Mix.
Yeah.
Okay.
Okay, so thank you everyone for this short fireside chat. I mean, I kind of enjoyed it. We could have gone on and on. We've touched a lot of topics. Some of them are new topics. Some of them are, I guess, controversial topics. Some of which are really futuristic topics. And it was great. I hope the audience enjoyed this fireside chat. Thank you, everyone.
Thank you. Stay safe.
Thank you. Keep safe.
Yeah.